Go back as gold is skyrocketing this year. Again, we only put the facts in. We subscribe to the Wall Street Journal and the New York Times. Not one word about spiking gold prices for months. For months, not a word. Because gold spiking is telling you how bad things are. It's the world's #1 safe haven asset. There's going to be the death of the dollar. And again, the lower interest rates go, the deeper the dollar falls, the higher gold prices go, and much of the world has had enough. This is going to be the greatest depression. This is going to be the worst we've ever seen. It's been artificially propped up for a decade, and they only could do so much for so long. So we could see gold easily over $5,000 within the next maybe 5 months. It could definitely go above that, or even less. And the same with silver is going to keep going up. So we're very positive on both of them. If cryptocurrencies were in here, gold right now would probably be about $7,000 an ounce.
Gold and silver prices continue to show strength, signaling a robust bullish momentum in the market. Investment banks are making bold forecasts, with Goldman Sachs projecting the gold price could surpass $4,900 per ounce by the end of 2026, driven by sustained central bank purchases and anticipated interest rate cuts by the Federal Reserve. Central bank gold demand has become the largest single source of purchasing globally, with emerging markets leading the way to diversify reserves away from the US dollar due to geopolitical and economic uncertainty. This institutional buying, coupled with rising safe haven demand, continues to create a strong price floor for both gold and silver, which is expected to see further increases fueled by growing industrial use in technologies like solar energy. The speaker, Gerald Celente, is a renowned trend forecaster, author and founder of the Trends Research Institute, and publisher of the Trends Journal. He asserts that the mainstream media, including the Wall Street Journal and New York Times, have been silent on the skyrocketing gold prices, which he views as a critical indicator of a deeply troubled economy. Celente forecasts a greatest depression and the death of the dollar, predicting gold could easily surge to over $5,000 an ounce within months, especially as interest rates drop and the dollar weakens. He argues that the world has had enough of the US's geopolitical and economic dominance, pointing to the rise of Brics nations and an artificial boom propped up by financial measures like zero interest rate policy and quantitative easing. Let's watch clips from Gerald Celente's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Go back as gold is skyrocketing this year. Again, we only put the facts in. We subscribe to the Wall Street Journal and the New York Times. Not one word about spiking gold prices for months. For months, not a word. Because gold spiking is telling you how bad things are. It's the world's #1 safe haven asset. And one of my books is called Trend Tracking, far better than Megatrends, Time Magazine. I wrote about how I started buying gold in 1978. All right. I've been at this a long time. And there's no comparison to why gold prices are going up now compared to then. Back then, America was #1. Nobody was close to us. China had a gross domestic product of about $150 billion. India, about $120 billion. United States, it was like over 5 trillion. Over 5 trillion. Now, what's China's GDP? About 20 trillion. Oh, you mean they went from 78, they were only 150 billion, and now they're 20 trillion? Yeah. Oh, and what else? Here. The reality is much of the world has had enough of the United States geopolitical and economic hegemony. They've had it. The BRICS control 40% of the world's gross domestic product. 40%, they've had it. There's going to be the death of the dollar. And again, the lower interest rates go, the deeper the dollar falls, the higher gold prices go, and much of the world has had enough. We are not the same country we were in 1978. It's a whole new world. Let's go back last week. NVIDIA, right? Oh, they came out. Everybody was waiting Wednesday, the numbers will come out. Oh, and their profits went way up. Oh, the Dow went up 700 points. The NASDAQ went up. The S&P went up. and then they all went down.
Yeah.
They're way overvalued. China is going to lead the world in AI. India number 2. Look what Trump wants to do with the H-1B visas to bring more Asians into America because he wants to make this the AI capital of the world. So again, we only go by the facts, not what you like, what you want, what you wish for. What is, there's going to be a dot-com bust. When the dot-com bust happens, gold prices are going to spike. The economy is going to go down. And the reality is finally hits the street when Wall Street goes down. Let's go back to 2023. 3 banks, Signature, First Republic, and Silicon Valley Bank.
Silicon Valley, yeah.
Yeah. 3 banks went bust. What happened? 3 banks. Poof, down went the equity markets. Poof, up went gold. That's 3 banks. You're going to see banks unable to pay these mortgage loans that owners of the buildings can't pay. They're going to say, keep the building. I don't want it. It's empty. They don't have the money, the banks, to pay this off. So what's going to happen? Here, again, sometimes people call me a futurist. Now, I'm not a futurist. You can't predict the future. There are too many wild cards, whether they're made by humans or nature. Let's go back to the panic of '08. As I said, the dot-com bust happens in March of 2000. The NASDAQ is down 80%. 9/11 happens. Everybody forgot about it. And they created this fake thing. You don't have a job. You're out of work. You're deep in debt. Don't worry about it. Sign over here. You get a subprime mortgage. Remember that one? Oh, and how about the derivative scams? Okay. So now the banks are going bust. I thought there would be another crash in 2012. I was 100% wrong. They didn't teach me about zero interest rate policy and a thing called quantitative easing in Economics 101 at graduate school. Go back to Bard College, Levy Institute. The Federal Reserve bailed out the banking system to the extent of $29 trillion. They'll do everything they can to keep the system going and how fraudulent it really is. And you mentioned before about 2019, the repo crisis. What happened in 2018? Oh, December 2018? The worst Dow since the Great Depression.
Yeah.
And what happened? Trump called in Jerome Powell. You got to lower interest rates. Jerome Powell lowered interest rates. In January of 2019, equity markets went up, what? Some 22%. And the repo crisis happened. And everybody forgot that when the COVID began in 2020. And again, you can't make this stuff up. I thought everything would collapse when they locked down everything. I didn't know they would pump in trillions and trillions of dollars of fake money backed by nothing and printed on nothing.
Right.
Or bring interest rates down to 0 again. That artificially propped up everything. So it's an artificial boom that's now busting. Right. And the only thing that's keeping it going is AI. It's going to be this is going to be the greatest depression. This is going to be the worst we've ever seen. It's been artificially propped up for a decade. And they only could do so much for so long. And again, they're going to lower interest rates. That's the guess on the street. The lower interest rates go, the deeper the dollar falls. And the deeper the dollar falls, of course, the higher gold prices go up. Gold's dollar based, so the currencies go up. It's cheaper for other countries to buy gold. And again, look at what's gold is going on. I mean, this is, again, you look at our Trends Journal cover, top trends for 2024. We said it would be a golden year for gold. And it was. Gold went up, what? Last year was almost 30%. And this year it's up, what? Over 50%. And again, go back to October 16th. Of this year, we said there's going to be a correction in gold by about $500 an ounce, and it did. Nothing goes straight up, and it's going to be a correction. And now we're saying gold has to solidify over $4,200 an ounce, solidify, and then it goes up and hits another new high. Okay. That's the way we see it. Gold is going up because the world sees what's going on. Look it up. They're talking about why the markets are going up right now. because of the confidence that the Fed's going to lower interest rates in December. So the lower interest rates go, the higher inflation goes too.
Yeah.
And again, when you put the real inflation numbers in, they started rigging this in the 80s and the 90s. I talked about housing prices going up 50%. No, we don't do that anymore. We put in other costs that have gone up, so we don't put that number in. They rig the numbers, so they're much higher than they are. And now when interest rates go down, inflation is going to go higher again. And again, the higher inflation goes, the higher gold prices go. Look, if cryptocurrencies were in here, gold right now would probably be about $7,000 an ounce. Again, as we said, gold has to stabilize above the $4,200 an ounce. That's the way we look at it.
Right.
And once it does, it goes to a new high. And it's just going to keep going up. We don't see it going down, and it'll stay high. And you're going to see more and more failures of economies. And the lower economies go, the higher gold prices go. So we could see gold easily over $5,000 within the next maybe 5 months. It could definitely go above that, or even less. And the same with silver is going to keep going up. So we're very positive on both of them.
Gerald Celente's analysis suggests that the unprecedented surge in gold prices is a direct reflection of underlying economic distress, exacerbated by the artificial propping up of the financial system for the past decade. He views gold as the ultimate safe haven asset, and its rise, which he says the mainstream media ignores, foretells a greatest depression and the ultimate demise of the US dollar's global dominance. The continuous lowering of interest rates is predicted to further devalue the dollar, propelling gold and silver to new highs, with gold potentially exceeding $5,000 an ounce in a matter of months. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.